Mr. Bigelow is like, hey, they don't care too much about who you are. They want to hear about what you have, your content, your information. So I want to first start by saying the things I'm going to go over is some really different, interesting topics in which I've been able to see literally thousands of people take advantage of. And so because I own a trust company, I'll talk a little bit about that here in a minute, I have been able to see what people are doing to have success, from the stock market to real estate to businesses. I have the opportunity as an IRA trust company owner to see what's being invested in, what's working, what's not working, and then also different ways in which people are truly creating gains without paying taxes. And that's one of the arts that I've learned that the IRS has set up for many of us to take advantage of, but many people don't know how to do it. And so today I'm going to go over two specific concepts that will really change the way that you are investing and or shed some light on some things that maybe you didn't know about, that maybe have been subjects you've known about for a little while but didn't know you can do that much with them. And so I'm going to go kind of quickly here, and so as I go through, I'm going to leave plenty of time at the end to do any questions and answers. Feel free to ask them at the bottom here in the chat box. Ask the questions. I'll cover them as time goes on. So if I don't cover them, obviously, throughout my presentation, at the end, I'll definitely cover your questions. So I'm definitely going to talk about how to make money and avoid these taxes that most people are still paying on things they shouldn't be paying on, how to actually do different kinds of deals, both real estate and business deals, by using someone else's money. And obviously also how to create passive strategies. I'm excited about the passive strategy side because that's something that has truly changed my life. It's allowed me to be home with my family, be able to do business from afar by actually doing these different investments where other people are doing most of the work, and I'm leveraging their time, their energy, where I can get monthly checks. And so for me, and the majority of the clients I work with, we all get monthly checks. Every single month we get a check. Most people that get the checks from the things that I'm going to talk about today are not paying taxes on it, or are not paying taxes on any of the gains. And so I'm going to talk to you about this. And this is stuff that's been around for a long time, but surprise, surprise, it's typically the government that knows about these rules and is taking advantage of it. So I'm going to talk to you about the process, talk to you about how to pay less in taxes to the government, and how to get going right away within the next 30 days. Like Mr. Bigelow said, Stephen, he said, I'm not going to cover this too much, but I've been doing this for over 15 years, actively been investing. I'm actually working on a TV show right now. I can't say too much about it yet, but I'm excited about it, where I'll be showing and teaching people about some of the implementation on a fun reality TV show. So if you're into reality TV, you'll probably remember my name, and you'll see me here soon. One, I think, also important thing as well as you get to know me, and especially the second part of today's discussion, I'm going to be talking about the $1 billion mark. That's something I've done. I'm proud to say over the last 12 years of my career, I've been able to lend out over $1 billion of monies in real estate, and a lot of that has been through IRAs, and I'm going to talk about that as well. And importantly here, I got to go over this. This is the crew right here. You can see my 4 kids. I got my 6-year-old there in the air. At the time he's in this picture, I think he's 4.5. I got to update my picture, but I did catch him. He did not fall, and that's my crew. So I'll get right into the content as we get going here. So just a few stats before I go into the content too heavy as well. I want you to understand why this subject is so important to you and hopefully everybody else. Is this stat that I got from the Social Security Administration Act. Out of 100 people at the age of 65 that go to retire, 54 people are dead broke. Frankly, there's only 4% of the people are financially secure, and 1 that's wealthy. That's it. That is a stat, and that is a huge problem. That's why people are concerned about Social Security, how they're going to take care of their retirement days. And what's even more disappointing, frankly, is what they deem financially secure. Financially secure to them is being able to have over $3,000 a month coming in. So if you have over $3,000 a month coming in at the age of 65, you are deemed financially secure. To me, that's definitely not financially secure. So I'm going to talk about these couple, something that's going to help you affect some of these enemies and how you can be part of that 4%, how you can be financially secure. One of those things is obviously keeping up with inflation. I see so many clients and individuals going broke slowly. What I mean by that is they're making money, but not enough. They're leaving their money maybe in CDs where they're not even keeping up with inflation. You have to avoid inflation. And if you can't make more than inflation, which many people are not with the ups and downs of the stock market or in the banks, that is an enemy, and will hinder your retirement as you go to be part of that 4%. Also volatility. Besides inflation, there's volatility. The market goes up and down. I know that we had a good run for a little while, and then obviously last quarter, it's been a little different story. How do we avoid volatility? The first thing, the first enemy, number one, is how do we avoid inflation? Number two, how do we avoid volatility? I'm going to talk about that as well. And then lastly, how do we avoid taxes as well? So inflation, taxes, volatility, that's kind of my goal. That's something I've been focusing on, specifically the way I invest and my investors invest. I'm able to avoid most of all three of these enemies. And so one way in which I do that, and I'm going to talk about the actual vehicle in which holds my assets where I'm able to avoid the tax side of things. So let's just talk about that for a minute. Now, a lot of you have probably heard about self-directing. So there's things I am certain you've not heard about regarding self-directing that I want to talk to you about right now. And again, this is something interesting because, and I might get to this in a second, but this became kind of big back when Mitt Romney was running. When Mitt Romney was running for president, if you recall, it showed he had to show his financials, and his IRA went from $20 million to over $100 million in a 5-year period. And that's because of the way he was investing. And that opened up actually a lot of marketing, a lot of people talking about it, what he was doing, how was he making those kind of returns. It was by doing non-traditional type of investing. So I'm going to talk about that a little bit more in detail, but again, bear with me because this is really good content on things that will truly change the way you invest and most importantly, make you part of that 4%. So you're financially secure, or more importantly, even wealthy. Excuse me. Only 4% of Americans are actually self-directing. So what does self-directing mean? Of this 4%, it's over $7.2 trillion in the self-directed IRA space. That's all that represents that 4%. The other 96% are in traditional investments. So what does that mean? Self-directing, frankly, it's not a legal term. It's a descriptive term. So a self-directed IRA means it's basically an IRA, an individual retirement account, established and set up by you, which you are the owner of, and it's held with a trust company, which I'll talk about, which I own one of those, and there's many others, in which it is self-directed, meaning you can self-direct or put your funds in things that you understand or things that might create more value. And what's exciting about that is typically what I've seen is more people today are investing in things they understand and they have more control of and more security and collateral. And by doing so, when you invest in the things you want, you're avoiding a lot of these taxes, you're avoiding the inflation, and you're typically getting better returns and paying a lot less in fees. And that could even be in the stock market. I still invest money in the market. I like the stock market for a portion of my funds. But a big lion's share of my funds, I'm going to talk to you about what I do here after we talk about the self-directed piece. But in particular, a self-directed IRA, if you do not have one, you need to be doing your investments, whatever they may be, inside of a self-directed IRA. So that also includes if you already have an account, let's say it's with Schwab or Fidelity or wherever it may be, any typical traditional custodian, you can open up a self-directed IRA where you can move all or part of your funds to a trust company in which you can invest in what you want. I'm going to talk about that as well. And that also works for people that have an old 401k from a previous employer, especially those that have old 401ks from previous employers. You are probably sitting on a little asset that you're not paying attention to and is not performing the way it should be. So a trust company like ours, Horizon Trust Company, it's licensed, it's bonded, the funds sitting there are FDIC insured, and we're regulated. We're regulated by the IRS and also by the banking division. So a trust company, its job is to hold the qualified or retirement accounts funds and take direction from the investment or applicant owner. So if you are the IRA owner, we, the trust company, takes direction from you, and you tell us where you want to invest those funds. It's our job to make sure they're not prohibited, so we'll give you instructions and make sure you don't invest in prohibited transactions. Some of those prohibited transactions can be arts and collectibles, very few things, but typically arts and collectibles, and also like you can't invest in your own personal property or vacation home, things like that. You can't invest in alcohol. But pretty much almost everything is fair game in a self-directed IRA. And so how do you get part of that financially secure, that 4% club? Well, you obviously have to generate higher returns, and you got to reduce that volatility and eliminate the taxes. So as you do that, you're going to create these profits. You want to protect it. And so many of you have already built up a nest egg. Many of you are already investing. In fact, I've been working with Mr. Bigelow and a lot of his followers and students and clients for the last couple of years, actually. And there's I've talked to, we've done 2 webinars over the last 2 years, and we've had a lot of success. In fact, some of the best success stories I can tell you are from some of the big O clients that have actually taken advantage of some of these tools that we're going to talk about in a little more detail, as well as the passive side, which is very exciting, where they're getting passive income, which allows them to relax a little bit more during retirement rather than being so active, where you're not maybe doing active trades or you're maybe not doing active investment real estate flips. There's been some great successes in from these Bigelow webinars, the 2 we've done. It's been great. And so I want to give you one example here. I want to jump right into it. So one really good example is my first deal. You can see a picture of it right here. My first deal in real estate. So I flipped this property, and I actually didn't put up. I had to borrow money from somebody else because I had no money at the time. I found the property, found the opportunity, got the comps, had the rehab people, and I had an investor who was willing to lend me at the time $60,000. He lent the $60,000 to me. We rehabbed it. We sold it, got a $12,000 profit. He got 75%. I got 25%. He was happy as could be. It happened over a 3-month period. His rate of return, if you do the math, was really, really good. He was very, very happy. The important part of this is he did this investing with his IRA. He was my banker. And when he did so using his self-directed IRA, all of those gains in that 3-month period went tax-free back into his IRA account. So that $60,000 went to $69,000. $69,000 in the 3-month period. And he did not pay any taxes on that. And that was in his Roth IRA. So when he turns the age of 59 and a half and he wants to start taking distributions from his Roth IRA after he kept doing this over and over again, he can do so and do it in a manner which he's not paying any taxes. Grows tax-free and comes out tax-free. Anyways, my first deal was funded by somebody else's IRA account. Okay? Now, I do it a little bit different now. Now I'm doing a lot of my own, but I wanted to give you an example of one idea of what a self-directed IRA can do. In my example, I used someone else's IRA to invest in my deal, and he did so in this form. Now, I show this because it's fun. This is like my 8th or 9th project I did. Now, a lot of people are asking, wow, you must have made a lot of money on this deal because you're able to recycle all this cans. That's not what you should be asking. You should be asking, why was I not invited to that party? But seriously, though, this project, I kept, after I flipped about 6, 7 deals with this IRA partner, after that, I changed the terms. I decided I'd start paying him a fixed rate of return. And he was willing to do it because I had now proven myself with him. He became my banker. And he lent to me passively. I borrowed the funds, and he got monthly checks. And after every deal paid off, he got his money back over and over and over again. So is this something new? Is this whole, is this self-directed concept that I'm talking about something new? It's been around for a long, long time. It's not anything new. The IRS has a code for it, and I don't like to get in IRS stuff because it's not too exciting or fun. But you can invest in almost anything. Here's the restrictions: artwork, stamps, rugs, antiques, etc., or investing in your own homes like we talked about. But what's interesting as well is most traditional custodians, where your money's invested probably right now for the most part, 96% of you, it's invested with a traditional broker or a custodian that only lets you do traditional investments. It does not allow you to invest in what you want. So if you want to invest in a residential property or in a business, I funded my own business and other businesses with my IRA, and you can do so as well. What's exciting about that is obviously all those gains go back to your IRA. So someone's comment here, they're getting some echo here, so I don't know if Jim, you're still on that, and if you're getting too much echo, I don't know if this helps or not. So, okay, cool. Anyways, here's an example. A good example of Tim here, a 40-year-old who's 25 years away from retirement. He has $45,000 in this Roth IRA, but he wants to actively flip homes, trade in stocks, and buy businesses. And obviously he can't do all those things probably, but he could probably do 1 or 2 of those things with his $45,000. So he wants to pull out some cash as well. And so we're going to talk about this example. If he were to use that $45,000 outside of his IRA and make a 17% rate of return over a 20-year period, at that tax rate of 30%, he'd have $400,000. Doing it inside of his self-directed Roth IRA, he'd have over $1 million. Just by avoiding those taxes over a 20-year period, it's a $600,000 difference. That's the difference of him being able to retire way more comfortably, having an additional $5,000 a month every single month in interest only if he uses his Roth self-directed IRA. Makes a huge, huge difference. So some interesting stats as well. It says some people think they make too money to contribute to a Roth. That's actually not true. You can open up a self-directed individual Roth 401k. Those of you that make too much money or think they make too much money, because if you open up just a traditional Roth, that is true. If you make too much money, you can't contribute to a traditional Roth IRA. But for those of you that make more, there is no income limits on an individual 401k Roth. I currently have that for me, and it has allowed me to put away a lot of money. And here's a good example of it. In an individual 401k that's taxed, it's a Roth IRA, you can put up to $51,000 or $56,000 per year. That is huge. So even if you make $1 million this year, you can still contribute $50,000 to your Roth. It is not too late. This is a game changer for those of you trying to catch up to your retirement and getting there much quicker. So this is definitely not the case. If you've heard this and that you can't contribute, at the end I'm going to give you guys a gift. In fact, I'll jump to a little bit here in a second, but I'm going to give a gift for everyone here on this phone call. But one of those things is I want to make sure those that you want to learn more about some of these concepts that I'm talking about, you're going to be able to talk to one-on-one to one of my specialists that work with me on a daily basis on answering some questions for you, how they pertain to you. Because some of these things might be a little bit different because maybe of where you live or your age, if you're 70 and a half, we will talk specifically on how that can affect you. Another thing is, that people think they can only make $5,000 in their Roth. That's definitely not the case. I have made much, much more money in my Roth IRA, and I continue to do so. And so that's the exciting part. I can tell you, Mitt Romney wasn't only making $5,000 in his IRA. You can make more and more money in your IRA than ever before. And so I've done that through businesses and through real estate, over and in the stock market as well. So, there it is. I already talked about it. The secret behind Romney's magical IRA is $21 million to $102 million investing in his Bain capital. So there's definitely multiple ways in which you can use the IRA. Through real estate, like it talks about here, through stocks, land, foreclosures, wholesaling, businesses, all these different ways you can invest using your self-directed IRA. It's really up for you to decide what kind of IRA you want. If you already have, and now, again, this sometimes isn't as an exciting subject, but it is very exciting if I start showing you the hundreds of thousands of dollars of difference that you'll have in your account when you go to retirement. It is not too late to start. You should begin now putting your gains inside of your Roth IRA. If you have a business or you want to start a new business, open it up and have your Roth IRA fund it and own it. So all of your gains go there. And then you can have a different business that's not related to your IRA that you can live off of. I've done this over and over and over again. So it's really up for you to decide. If you want to have a Roth IRA or a typical traditional IRA, you can do that as well. There's just tax differences. Obviously, if you have a traditional IRA, it's pre-tax dollars. So you put in you get a tax write-off today, but then your money's over your retirement or your work years, it grows and it comes out, and you pay your taxes then. If you do a Roth, you pay your taxes now, but at the end of retirement, when it comes out, you pay no taxes on your gains at all, because you've already paid them. So some of the wisest investors are using a self-directed individual 401k. Now, why is that? You can put away a lot more money, like I talked about right now. You can put away up to $50,000, $55,000, and you have a lot more flexibility. And there's definitely some favorable rules towards business and borrowing and avoiding the UBIT. And so one thing that a lot of people like doing, that I've seen people over and over doing, is opening up a self-directed 401k and then creating your own business line or line of credit. With a traditional IRA, you cannot borrow against it. With a 401k, you can borrow $50,000 or 50%, whichever is less. So if you got a $100,000 IRA, you can borrow $50,000. Or if you got a $50,000 IRA, you can borrow $25,000. So what's crazy and great about this, let me give you a good example, is if you had, let's say, $50,000 in your credit card bill right now, and at a 16% interest rate, over the next 5 years, you'd end up spending $80,000 to pay back that $50,000, $30,000 in interest. You can actually take out $50,000 out of your 401k and pay off that same credit card debt. And over a 5-year period, pay your IRA back, you would only pay $5,000 in interest. That's a $25,000 difference just by doing it with inside your 401k. Any one of you on the phone here can move your self-directed or IRA into a 401k, no problem. We help people do that every single day. And as you do so, you then, if you choose to, if you want to use your money for paying off debt, going on vacation, paying for education, vacation, whatever the case is, you can use it for whatever you want. The deal is you've got to pay that money back within 5 years, and you got to pay an interest rate back to your own retirement account. And that rate is typically prime +2. But what's crazy about that rate is you pay it to yourself. That rate goes back into your retirement account. So basically that loan is kind of like a tax or it's an interest-free loan. That interest you're paying is going back into your retirement account. So not only is it very, very low, so the money's a lot cheaper, but it's also going to save you so much money. You're also going to get that money, you're paying it to yourself. It's a big deal. Anyone almost that has an intent to make money, that has an entity, an LLC or a C Corp, etc., as a legal entity, can open up a self-directed 401k, and we help people do that as well. So because I learned how these self-directed accounts work and learned the power of those, I've gone and I found people in the beginning of my career to help me fund my different businesses and my real estate ventures. And still, what's exciting is if you're trading in the stock market and you have a self-directed IRA, you can also use your self-directed IRA to invest in the stock market. So if let's say you have a $100,000 IRA, whatever the case is, you roll it over, you can put a portion in the stock market, a portion real estate, a portion in businesses, however you deem that you'd like. So obviously, the other thing that we do, and I already talked about, so I don't want to spend too much time on this, is the taxes. By doing all of these things inside of your self-directed IRA, you're going to avoid all of these taxes. Right down here, the Roth IRA, you can see it makes such a big difference. So by protecting your money, you're opening up a self-directed plan, you're putting money in it, and you're then investing it. It's a very simple process. So as you do so, if this is something that you want to test out, in fact, that's another important part that people typically ask questions about here, is can I open up a self-directed IRA but not move all of my money to it? The answer is yes. If you have again, a $50,000 IRA and you want to move over half of it or a portion of it to a self-directed IRA and leave the other portion there for your financial advisor to work on with you, not a problem at all. Or if you want to open up a new Roth IRA, you can do that as well. Once you open up the account and you put money into it, and you can do that through different means, either put a contribution or you can roll over funds from somewhere else, you then identify your investment and you complete a direction of investment form. We call it a DUI. Not a DUI, a DOI. A DOI is something that is direction of investment where you are investing, I'm just trying to see if you're paying attention, investing your funds into something that you want to be investing in. As long as we have the correct documentation, it's very, very simple. That's how you put the money in, contributions, rollovers, or transfers. So you can also take a lazier approach. You can use your funds and then get it into a self-directed IRA and then invest it in someone else's business or someone else's program in which they're already creating interest rates and already have contracts for you. I've seen a lot of people doing that as well. And I'm going to talk about one specific example that many of the Bigelow followers, Stephen Bigelow followers, have been taking advantage of and doing, and that are getting passive monthly checks every single month. So Horizon Trust, we've been around for 5 years now. Our partners have been doing this for over 17 years. It's a simple process. It's been around for very, very long. It's very easy. Our staff is very, very good at helping you decide which IRA is right for you. If you want to pay it pre-tax or post-tax, today we'll help you set up either a Roth IRA or a traditional IRA, or even better, a self-directed 401k, which can be taxed either as a traditional or a Roth IRA, which is obviously the route I would go if you have an option. You want to go to Roth 401k. Now, I said a mouthful here about all these IRAs and Roths, and sometimes it gets a little bit boring, but I'm going to tell you about a strategy here that people are doing with inside of their accounts that's creating real income today, that's beating the stock market, that has security, and it's very, very consistent. So I already talked about the benefits of these tax-free accounts. I'm going to kind of skip over that. Very, very simple. Open account, fund it, and start investing. A lot of financial advisors or groups are trying to make it very complicated to do this. It's not complicated. You can do it. It's been going on for 30 years. So the difference, that slide right there of $2.5 million. Many people, if you start now, a lot of you, if you're in your 30s and 40s and you're saving for the next 20 years, it's the difference of $1.5 million to $2 million just by doing it with inside your IRA. And a lot of people are telling me, you know, I'll start opening this account after I pay off my house, or after I pay off my debt, or after I pay whatever the expense is. I I ask and implore and invite you not to wait that long. I can't tell you how many people I've seen that are now in their 50s and 60s who are just starting their retirement accounts. Don't wait to pay off debts. Start your retirement account even if you have debt now. Do not wait. Start now, because you'll be thanking me 10 years from now when you have a nice nest egg. You need to be part of that financially secure group, which is the 4%. So now I want to talk about what people have been doing inside and outside of their IRA accounts, but specifically inside of their IRA accounts, because I just talked about IRA investing. But for those of you who have a lot of money outside of your IRA account, this concept I'm going to teach you right now works for you as well. In fact, I have many, literally over 4,000 investors that are doing this project right now. I shouldn't say project, but investment of creating a bank right now with your own money. I actually thought when I was young that if I wanted to create a bank, I'd have to have millions and millions of dollars. It's not true. You can actually create your own little bank, a passive little bank, with as little as $15,000 to $20,000. I'm going to show you this example right here. I find this humorous because a lot of us all the time go into, well, I shouldn't even say all the time, because now we have online banking, so we don't go in the banks too often. But when we do go in the banks, what happens? We see a couple things. First, we'll see a little flyer that says, please put your money here with us. And they're all excited about it, right? The bankers, the tellers, the managers, they're all pumped. Like, if you give us your money, we're going to give you 0.45% of your money. They think it's like the best thing ever, because you're getting a 0.45% of your money. You and I both know that doesn't even beat inflation. So you put your money there, you open your account, they're all excited about it, and then what happens? You go back to that same bank 3, 4, 5, 6 months later, and you ask them for what? You ask them for a loan. So now when you ask them for this loan, what happens? They say, sure, we're really excited. We're going to give you back your money, and when we give you back your money, we're going to give it back to you at 4.5%. So who's the winner? Who's the winner in this example? The bank's the winner. The bank is the one that creates that arbitrage and makes that difference. I learned years and years ago that I want to be a banker. So today, thankfully, I learned about the instrument of banking, and I learned how passive investing was the way I wanted to go. And so I'm going to teach you about this passive investment strategy that is very much like a loan that somebody asked. We're going to talk about it here in a second. So, actually we're talking about right now. The parts of a loan or a mortgage or being a banker are typically this: a loan amount, an interest rate, the term, and the collateral. And just to keep it simple here, if the interest rate is 12% per year or 1% per month, and the loan amount typically means the collateral value means the loan to value. So for example, if someone came to me and said, I want to borrow $75,000 on a property that's worth $100,000, that's a 75% loan to value. So your margin of safety in that example is 25%. I'm going to talk about that in a little more detail here. Here's a good example. So a property pays us for $86,000. This is a real deal. And let's say you came to me and you said, you know what? I have this property. It's worth $86,000. I own it free and clear, but I want to borrow $45,000 against it. You invest $45,000. A property is worth $86,000. We negotiate, decide on terms, a 12-month deal. If any problems happen, actually I should even before I get there, I then begin making monthly payments on that $45,000. If I stop making any payments, what do I own? I have a first lien position. So whoever lends that $45,000 is on the property, kind of like Bank of America or any other bank. They're on the first lien position. Their name's on title. So if there's any default, you end up owning a piece of property that you then take back. You can rent, you can sell, you can do whatever you want with. That's one simple example. I go on and on. All of you that have your own homes, let's say if you have a home right now and it's worth $200,000 free and clear, and you came to me and said, hey, I want to borrow $140,000, and the appraise is for $200,000 a day, I would give you a loan, as long as it all penciled out and it was a good loan and there's no liens on the property, $140,000. That is a good investment. Why? Because I have a $60,000 security blanket that protects me on my money, and I have collateral. I'm not worried if the stock market goes up or down. I get monthly checks as long as you keep paying me every single month, and I love doing those loans. That kind of investing is the way I invest now, so I can avoid the ups and downs of the stock market, and I can also avoid what I did in the beginning of my career. In the beginning of my career, I had to borrow other people's monies and go find homes and flip homes and sell homes. Frankly, after a while, it got a little old. And so I learned that the people that were lending me the money for it were in the better position. They were getting monthly checks, and they were staying on the beach, and they were just relaxing while I was doing all the hard work, and they were getting solid monthly checks. Today, because of the growth and because of the assets I've been able to save, I've been able to now be the banker. I'm that banker where I lend and I get the monthly checks. And frankly, what I've learned as well is over time, getting those monthly checks is typically just as good as getting the profits when you flip a home. I've seen it over and over and over again. I've got a lot of friends of mine that you've maybe even seen on these reality TV shows that do real estate are all excited about flipping homes, but the second they learn about banking and using their money where they can start passing or getting passive income, getting monthly checks, it's changed the way they do business. This as well will change the way you do business. It will change the way you're prepared for retirement. For those of you, in fact, here's the next example. A good example, for those of you that could be in their case scenario in their 50s, that you might be 10 years away from retirement and you have $300,000 or so in retirement accounts. But maybe you're inexperienced in managing investments. You don't want to have a super active role like where I am today personally. Let me show you an example. They decided they wanted to be the bank. They wanted to start lending money the way I'm talking about right now, the way a lot of Bigelow clients have been investing when working with us. They wanted to create that bank and invest in these short-term loans that range from 6 to 18 months. Here's what they did. They said, you know what, I have $350,000. They said they could contribute $13,000 per year. And with 10 years left to grow and a 9% interest rate, I want to be conservative on this because typically the interest rates range from anywhere from 7% to 12%. So 9 is a real solid rate of return. They would have over $1 million in retirement. $1 million just by doing things a little bit different, by taking control of their money, paying attention to it, and having consistent collateral returns. In the stock market, there's too much volatility. They don't know what's going to happen. What if they tried to retire in 2007 or 8, right after the market had collapsed, after they saved up all their money? In this case scenario, Charles and Mary Jones, in this example of $300,000, over a 10-year period, were able to get over $1 million. Now, what does that mean? With $1 million at a 9% interest rate, that is $92,000 per year, which is over $7,000 a month in income. So at $7,000 a month income, what do we talk about in the first slides? Financially secure. The Social Security Administration Act says you make $3,500 a year. This is over double that just by doing things a little bit different. I like to call it the 2% rule. Right now, a lot of you are paying too much in taxes, too much to your financial advisor. The volatility is going up and down. If you can just apply one or two of the things I'm talking about today and make an extra 2 or 3% per year on your money, it's the difference between you having $500,000 in your bank account in retirement or $1 million, just by tweaking it a little bit. In this case study here with Charles and Mary Jones, the example I'm giving you, they would get over $7,600 monthly passive. That little parenthesis at the bottom, I think, is an important thing. That does not touch their principal. So if they're getting this monthly check every single month and 10 years down the road, they're like, you know what, we're done. We just want to cash out. They still have $1 million in retirement. I can't tell you how many individuals that I meet with, and sad to say, that they're living off their retirement, but their retirement nest egg is going down every single month. Why? Because of these things we're talking about. They can't keep up with the volatility. It's time for you to take control of your funds, create a bank, create passive income so you're not having to do all the work. So the time is now to create your bank. And so I'm going to talk about some of the benefits, the things that we're going to talk, and I'll leave this open here for some question and answers. And I know that was important. We're getting a handful of questions, so I want to go over those. Excuse me. So the benefits of working this formula is you're able to create more time for yourself, create more money, and work a lot less. And so I want to give all those in this call here a gift. And my gift to you is a one-on-one consultation with my wealth specialist, the guys that I work with every single day that have been with me for years. Besides that one-on-one consultation, because a lot of you, I went over these two concepts pretty quickly about self-directing, how that applies to you, which kind of account is right for you, what are the fees associated, which I'll talk about here in a question and answers as well, but also what is banking? How does banking work outside of my IRA and inside of my IRA? What I love about banking is as you become this passive investor and you start making this money work for you in mortgages, just like the bankers are doing, you then are going to get these monthly checks. They go direct deposit right into your bank account every single month. This is the kind of stuff that allows you to have more freedom, allows you to do some more trades in the stock market, allows you to create more businesses, or allows you maybe to do your why, which might be spending more time with your kids or your grandkids. The other gift I'm going to give to you is a self-directed, self-made success Get Started Guide. This is a quick start. This helps you get started within 30 days. The other thing is I'm going to give you my book, my ebook called Bank on This. This is going to tell you kind of from how I started, when I began with literally nothing, how I created my own little bank, and how I create my passive income today. I spend most of my summer, because Vegas is too hot, in California. And so I go for 3.5 months into California. I'm able to still run my business smoothly because of the concepts I'm teaching you today. Getting monthly checks has changed my life and will change yours as well. The other thing I want to do is I'm going to waive your setup fee. So if you decide today on this call for the next 7 days, and for those that inquire, I'm going to have a number here in a second. For the next 7 days, those that open up an IRA account with us, I'm going to waive your setup fee. That's $150 savings on setting up your account. So I'll go back through that list here in a second, but before I do so, I want to go to this slide so you can write down this information. And we're on the West Coast. We're in Pacific time, so I still have staff in my office. So if you call this number, 888-226-6022, or leave a message, we will get back to you tonight or tomorrow and set up an appointment. But if you go to gregherlean.com/Bigelow, you can also register as well. Or, again, call 888-226-6022. So for those that inquire, what you're going to learn is first you're going to get this session, this one-on-one consultation with my team. You also get this book, this 33-day self-directed, self-made success guide, get started guide. My and we're going to waive your setup fees. When you do a call with my team, I will teach you, my team is going to teach you 2 things: how to use a self-directed IRA and also how to become a private lender. And so for me, our goal is to help you. If you don't have an IRA set up, you need to open up a Roth. Do not wait. But if you already have a Roth or a traditional IRA, the time is now to move all or portion of it into self-directing. Just by doing so, the extra 2% in your life will change your account, will change your retirement and have you much more prepared. And so, on purpose, I kept this simple. I know for those on the East Coast, it's already 8:30, 9 o'clock almost. I wanted to make sure I got through the content, give you a free gift. I'm not selling anything to you here today. One thing I want to hit some questions here. So if you don't mind, I'm going to go over some questions. One real quick question is the self-directed space. Horizon Trust Company is my trust company. We're based out of New Mexico. Our fees are $150 setup, and then it is 60 basis points. So on an annual basis, that's less than 1%. 60 basis points is less than, so basically on a $50,000 account, you're going to spend about $300 a year. And that's important to know because most of you are spending a lot more than that. And if you think you aren't, just go to Google Finance and type in your stocks and mutual fund symbols there, and you'll see that you're paying much more in loads and deferred fees. And so that is one of the things. But again, we're waiving your setup fee for anyone that calls today and sets up an appointment and talks to my team. All right. How do you invest the money? What are the safe? How is the money safe? Is a question here. So the money, basically, how the money works is me and my 2 partners, we own a company called CapSource. CapSource has been licensed for 17 years. It's a mortgage broker. And so what happens is there's literally between 10 and 20 loan requests every single week. And we have a loan committee, and we review the loans that are submitted by different borrowers, and we do appraisals, etc. And we make sure the values are correct, the borrowers are good. And as we look at those, we gather all the information, we put together a loan summary. And with that loan summary, once we approve the loan for the borrower and make sure it's a safe loan and comfortable and there's no title or no lien problems on title, we pull preliminary title reports. We then put together a little package and we send it out to our investors. We have a big client investor list, and it's kind of first come, first serve. So when we got a list of people who say, yeah, send me out your loan summaries when you have your next deal. We get a new deal almost every week. And it's first come, first serve. Once we know we put you on a list, you send out an email, and sometimes we'll send you a phone call as well. And if it's a good fit for you, we get you placed. And the nice thing about that, in our state where we originate loans, we can have multi-beneficiaries, which means with as little as $15,000 to $20,000, you too can be an investor. So if let's say it's a $100,000 loan, you can have 4, 5, 6, 7 investors on there, and you can be one of the 6 investors. So that is how you do it in a small scale. Question here. I want to start trading a trading company and trade futures with my existing self-directed IRA. Is this possible? Absolutely. You can do that. Call in. That's something that I actually personally might want to help you with to answer your questions. call in, set an appointment with us, tell them that you asked that question about the stock trading stuff, and I'll do the call with you. Do you carry insurance against fraud and defaults? Good question. On all of the loans, when you invest in a trust deed, in the mortgage that I talked about at the end, there is a lender's insurance policy. So there's a title policy in place, and there's also a lender's insurance policy making sure that your money is secure on the property. Now, is it guaranteed? No. No money is a guarantee, especially the interest rates we're talking about. But I feel like it's a lot safer than the stock market. So when your money is sitting at the trust company, while it's sitting there in account, it is actually FDIC insured up to $250,000. Once you decide to invest in anything, including if you decide you want to work with us on the debt, on the trust deed side that we're talking about, these mortgages, I've never seen any fraud. I've been doing this for 17 years. As far as the money like being a Ponzi scheme or anything like that, your money is secured on title. You actually can look up title on these properties, and your name or your IRA name will be on title. And what's also really cool, I guess, and important when you talk about fraud, is our company, CapSource, we never touch client funds. You'll never, ever write a check to CapSource or to me, ever. We set it up from day one that we use a servicing company called Westar. They've been around for over 30 years. And what happens is once you decide that you want to go on a certain loan, after you look at the loan summary, we send out loan docs. Those loan docs describe all the terms, and then your funds are sent to title directly or from the IRA company directly to title. The loan then funds and closes at title. And then the servicing company, Westar, services the loan, collects the interest payments from the borrower, and makes the interest payments to you or to your IRA. There's very little room for fraud, so obviously that's an important part of our business. How much do you have to have in order to do these mortgages is a question I see here. The minimum investment is $15,000. So if you have $15,000, you can get started. That's the part that I was surprised to learn when I was young in the industry. I thought I had to have millions to be a banker. You do not. You can start with as little as $15,000. What is our service charge? Well, on the IRA side, the trust company side, that's in Albuquerque, New Mexico, the fee is 60 basis points, I said, which is less than 1%. And I already told you I'm waiving your setup fee as long as you inquire and call in today or tomorrow. And so the other thing is on the lending side, the mortgage lending side, what we do is we charge points, and the borrower pays that. That's a really important question you ask, because a lot of people think, oh, we make money, we take money from your rate. Your rate is 100% your rate. So if you're making 9 or 10%, the 9 or 10% goes all to you. On these different loans, after we approve them, we charge them points to originate and fund the loan. And so typically the loans are about 12 months long, and what we like about these loans is they pay off quickly, and it's only to our advantage they pay off quickly, because when they do, we then call you and say, hey, Mr. So-and-so, we've got the next deal for you to invest on. We'd like to invest in it. And if it goes as planned, over 95% of our clients reinvest with us every single time, because it's clockwork. You get monthly checks. It's very, very simple. I don't know if I'm keeping up with these questions or not. You guys keep asking good questions. Do you have Canadian or offshore clients? Yes. I've got a lot of Canadian clients, actually. In fact, a lot of friends that live in Canada. I've had a few calls there from today in Edmonton with some clients. I want to start a trading company. I talked about that. Talked about safety. What are your thoughts on the self-directed, self-administered 401k plan? I have lots of clients. So we actually, a lot of our clients that open up a self-directed 401k plan with us, they are self-administered. You have the option to self-administer it. And so I'm not against it as long as you know what you're doing. Obviously, there could be issues if you don't know how to administer it, but there's just certain rules. Just make sure you don't do any prohibited transactions. Let's see here. I'm a rehabber looking for private lenders. What do you need for me to get the referrals and clients who want to lend? So if you're a rehabber looking for lenders, you can contact my company as well. We lend, but specifically in the Southwest. But I can also teach you ways in which you can find lenders in your area. Something I'm very good at, teaching people how to find money. Okay, I think I've answered all of the questions. Let me see if there's any more here. I'm sure that there's a lot. I think I've caught all of them. Call in. I wanted to go back to here. Definitely American Greed. Yeah, I get that. I understand. It's funny. There's a lot of different opportunities out there. This one that obviously makes me feel most comfortable because you are secured in the first position. If I was telling you to ever write a check to my company or my name, that's where it's less safe, for sure. Can you own physical gold? Yes, you can own physical gold in your self-directed IRA. That is definitely not an issue. If someone has no investing background, where could they start? We actually have a course. I'll give you, on top of what I gave you here, those still in the call here, in fact, there's still a few hundred of you still in the call here. I will give you my course on banking. I've got a course called Teach Me Banking. If you call in, those of you still listening on the call here, just ask for the Teach Me Banking guide. This is a great 101 on teaching you kind of the background. For those of you saying, this sounds too good to be true, or it sounds risky, or aggressive, or I'm concerned about it, but I like the concept, listen to my video course. It's a really good video course. We can give you all of our license. We've been licensed in town for a long, long time. You can look us up. We're audited every single year. Very good company that's been doing it for a very long time. My partner's been underwriting loans for over 35 years. We do not, one question, do we lend on small businesses direct? We don't. This is another question. Is it open to citizens, is it open, citizen can open? I don't understand the question, sorry. A self-directed IRA can be opened at other custodians. There's a handful of other trust companies that you can do it with, and if you decide to have a self-directed IRA with somebody else but want to do the lending with us, feel free to do so. That is definitely not an issue. If you are over the age of 16 and have some income, you definitely should open up a Roth, a self-directed IRA account. Definitely. It's not too early to start. What's the charge for the video course? I'm giving it to you. If you're still on the call, and a lot of you are, I am giving you the video course. So Teach Me Banking it's yours. Typically that's over $500. We got a lot of groups that do that, but I'm giving it to you. Okay, someone asked me to put the previous screen on here so you can see what I'm offering. The 101 consultation, a self-directed, self-made success guide, get started guide, my book called Bank on This. I'm also waiving your setup fee with my self-directed trust company. And then one thing I just threw in there that's not listed on here is I'm going to give you my Teach Me Banking guide. So on Teach Me Banking video course that I put together. Very, very informative and goes in great detail on some of these concepts. So again, I want to just clarify, there's two different things we talked about today. Self-directing, for those of you who just want to self-direct, you can go to the Horizon Trust Company. When you call in, you can ask about Horizon Trust Company and answer IRA questions. Or for those of you who say, look, I just want to learn about the banking side. I just want to bank. We'll teach you about the banking side and you'll work with CapSource. Or if you want to do both those things, my guys are experts in this. They'll go over all the things you want to talk about. Can someone start investing if they're under 18? Yeah, if you got a Social Security number and you're over the age of 16, yes. You cannot refinance. One of your questions is, you cannot refinance your own mortgage with your IRA. That is a prohibited transaction. So no, I like it. I like the question. Linda, where do you find the course? When you call in or email in, just ask them for the course. If you give us your email, which we'll collect, we'll be emailing you these gifts. But the Teach Me Banking course, they'll email you as well. Just tell them. I'll let them know via email when I get off this webinar, but I'll give you that course. Another question that's come in from Bill about your money being secure. Again, your money is, if it's at the trust company, sitting at the trust company, it's secured by the money sitting in an FDIC bank, Wells Fargo. If your money is invested in mortgages, the investment side we're talking about, earning 7 to 12% based upon the deal, your money is secure because it is on a trust deed. It's in a first lien position on the property. And so if it's on the property, you're on title. You're in first lien position on title, and so your money and your name is on there. No one can sell that property without paying you off. Furthermore, you have a lender's insurance policy, a title policy protecting your title on the property as well. Steve, I have one at Think or Swim. I'm not sure if that will work. Call us and I'll let you know. Gosh, you guys have great questions. I thought I was going to end it, but you guys keep going. I like it. What happens if it's in default? What's the benefit from the collateral? If a loan goes to default, you then end up owning the property. But before you own it, it's not that simple. It goes to default. Then after it goes to default, it goes to the foreclosure process. And the loans that we do, most of them, majority of them, are all in non-judicial states. So therefore, foreclosure is very quick, 90 days, and typically 90 to 180 days. And after it goes to default, you end up owning the property. So now as an owner, and we help you through the whole process. Unfortunately or fortunately, in 2007 and 8, we got a lot of experience with that. And to give you an idea, before 2007, only 1% of all of our loans were the default. And now, since then, in 2009, the same thing's happened. We've only had one default in 6 years. How much money you can start investing with? I said that $15,000 the minimum. Let's see here. Can you roll over a 401k into a self-directed? You cannot. If the 401k is a current 401k where you currently are employed, you cannot roll it over into a self-directed IRA. But if the 401k is from a previous employer or you're over the age of 59 and a half, you can roll it over to a self-directed IRA. Is it difficult to start your own bank? No. Is that a good, quick answer? I'll give you the video course. Teach Me Banking. I'm going to teach you how to become a banker with as little as $15,000. It's not too hard. Believe me, I thought it was hard. It took me 10 years to kind of put together this course, and now I see thousands of people doing it with us. It's not too hard. The banking side is a good offer for Canadians. The self-directed side I can't help you with because I don't work with RRSPs. I do not work with RRSPs. Rick. It does not have to be with the Roth IRA. That's the next question from Bob. Does this have to all be with the Roth IRA? No, it can be with the traditional IRA, Roth IRA, simple SEP, 401k. You can do any of these things. Is this similar to hard money loans? Yes, this is very similar to hard money. It's private lending, mortgages, hard money loans. Yes, you are lending. It's funny, some people think hard money loans are risky. When I have someone that gives me a personal guarantee, I have title insurance, I have collateral, and they've put 30% down, I feel like I'm in a pretty good, secure position. Who do we lend to? We typically lend on commercial projects, people that typically have paid us off in the past. We've got a good borrower list. What if I have a small amount and sharing the loan with others that defaults? Good question. What if you are one of the many investors on the loan? 51% of the loan, majority rules. And so if you go to default and foreclosure and you end up owning it with 10 other people, 6 people or 51% of the money basically controls. But out of my experience, there's never been a case scenario where the group has not decided to go with the recommendations that we at CapSource make for you. That's kind of our job. We're pretty good at helping find resolution to defaulted loans. That's important to us. We want to make sure those get paid off. And we don't want 10 investors from 10 different states having to call each other. Does Teach Me Banking videos talk about how to start investing? Yes, specifically though on the banking side of things. I don't buy tax liens, someone asked. No, it's not something I do. Will you send me the banker videos? Yes, I will, Rick. Once you call in and give us your email, we'll do that. All right. What else? You guys are good tonight. You guys are not, this is good. Okay. I have a Roth IRA with Option Express. How do I know if it's a self-directed Roth or not? Just ask them. Just ask Option Express. If you give them a call, ask them if you can self-direct your funds and put them into mortgages and trust deeds and other different alternative assets. They'll let you know real quick. If not, you can, again, have 2 accounts. There's no problem with that. You can leave some with them and move over some to Horizon Trust Company and do that in the banking side that we talked about. Question here, is it CapSource or Capital Source? If you go to CapSource NV for Nevada, nv.com, you can find out more about us. CapSource. That's the lending side of the business. All right, I'm going to wrap up here. Thanks again for the questions. Call in, set an appointment. We'll answer all your questions. We got some good loan summaries and examples as well as help you through IRAs. I really look forward to talking to you and seeing your successes. Follow me. Come, I got these gifts for you. I got staff in my office right now that will set an appointment for you to answer in-depth questions that you got. Go to gregherlean.com/Bigelow or 888-226-6022. I appreciate it. Look forward to talking and working with you soon. Thanks.